Hello, good morning, everybody. Welcome to today's webinar. Thank you for joining us on this very, very hot day, and we hope you're enjoying the sunshine. I'm Amber from Small Business Britain, and today we're talking all about how to get funding and investment for your small business with our lovely trainer, Emma Mills-Sheffield. Hi, Emma.
Hi, thanks, Amber.
Hello. So today's webinar is in partnership with Lloyds Bank Academy. They have lots and lots of free training and resources for small businesses. So do head over to their website and check that out, like this one today. Please do get involved in the chat, say your hellos, let us know your business and where you're tuning in from in the country, and put any of your questions into the Q&A function if you can. It just makes it a little bit easier for us to see them. We'll go through these at the end of the session. And we are recording today. I know we've got lots of information to give you, so don't worry if you miss out on anything, you'll be able to catch up, and we'll be sharing that with you after the session today with any follow-up resources. I think that's it from me for now, and I'll be back at the end for questions. So over to you, Emma.
Brilliant, thank you. As Amber said, put all of your locations and businesses into the chat. It'd be great to see who's around. So let me just turn that on. We've got a couple of Q&A already, I think. Oh, chat's disabled. So if we could get that open, that would be amazing. And that way we can all get the conversation moving. So Amber, I'm not sure if that's something you can have a look at. That'd be amazing if you could. In the meantime, I will just make a start on the session and on my introduction, really, whilst Amber fixes the IT side of things for everyone. Okay, so I'm Emma Mills-Sheffield, and I run Mind Setup as an independent consultant. Have been for about 3.5 years, ex-corporate, KPMG and other businesses. And I help small businesses become more effective, ultimately. So a lot of that is around business growth, it's around staffing, it's around leadership development, and making the environment for small businesses to thrive a better place, really. Bit of background, you can see at the bottom, I do live by the seaside, so I am very grateful in this weather at the moment. So yes, I feel for those who haven't got a swift sea breeze at the moment. But I also, I'm an F entrepreneur, a UK-wide campaign championing female entrepreneurs. And as you can see, featured in many different accelerators and publications around supporting business. I also run a small product business on the side, which is Brighton Preserves. And the reason I've put that in there is because as a consultant, you're very much B2B all the time, but actually having a product view as well means I also go through a similar experience to lots of you around how to develop product, how to go to market, and also thinking about maybe investment sometime. I'm just going to pause there because I think we've still got a problem with the chat. Amber, is it possible to get the chat function enabled?
It should be working. I'm not 100% sure why it's not. I'm just looking into it, but maybe for now people could put it into the Q&A function.
That might be the only option. Excuse me.
I'm working on it.
Brilliant, thank you. Yes, because I think Kaz has got her hand up and everyone's got chat function disabled, so we do need that working, don't we? Okay. Absolutely right. We'll be putting put everything into the Q&A for now. It's a good start. And the slides may well be shared. It is being recorded, but obviously we'll see if there's a summary we can send out afterwards. So really, let's get the questions going now. So you will have to put them into the Q&A, but it would be helpful to know what your questions are around small business funding. So what's on your mind when we think about growing and around funding, different options? And I'm going to stop there because we're going to cover lots of different things. This isn't just about finding investors, but that is one of the subjects. So do put the comments in here as well. Lots of different companies, great, all around the country, B2B, B2C, and so on. Okay, great. So where to find investment is something that's coming up. Also, we have learning about crowdfunding, which we will cover, expansion funding, where to find grants as well. Fab. Okay, keep the comments coming in and we will just start to work those through shortly. Grants databases, yeah. Perfect. All right, let's get going. So lots to cover. I want to just demystify some of the kind of, sorry, slides open. Trying to demystify some of the jargon that we hear. There's a lot that we hear about acronyms. When you're running a small business, you have to suddenly become the master of all trades. And so really understanding what you can do around the finances, just from a basic accounting perspective, is full of information and, you know, acronyms, and sometimes we say jargon. But around the investor space, there are other words, other acronyms that I think throw quite a lot of confusion around there. So what I want to do is just demystify some of these and then also talk about some of the funding ideas. So bootstrapping is something you might have heard of. That basically means no outside funding, you use your personal savings or you rely on sales to grow a business, and it's very much built from the ground up. Angel investment and seed funding. So these are two other words you might hear. And investment from wealthy angel individuals, they invest in high growth businesses, whereas seed investment may be pre-revenue. So it could be lower investment amounts. So pre-revenue, when you have an innovation, maybe a tech software business, and you're thinking about how you might start to get some funding, you haven't actually sold anything yet because you haven't developed anything to sell. But that seed funding means you can start to get things moving. Typically, some of the business incubators and accelerators often have links to investors for startups and small businesses. And accelerators are more likely than incubators to have seed money to invest, because they're generally focused on scaling a business that they see has potential rather than innovation. So not necessarily just in the tech space, which I think is quite a good thing for people, because often it feels like you can only go for sort of big investment if you're in, or early investment if you're in in a tech environment. Crowdfunding. So that's small amounts raised from a large number of donors via online platforms. Now, the key here is that you need a really good following already to get this. It's really hard to crowdfund from scratch. So you need to have a really good database of followers, people you engage with on social media, a really clear call to action. And typically crowdfunding works best for consumer products or services. It's not really a B2B space. And then the last couple of acronyms that you might hear are VC and PE. So VC is venture capital, invested in high growth businesses at the early stage. They might take a smaller portion, but it's higher risk, but yet also higher reward potentially, rather than private equity, where you may give up a large proportion of control, but that's at a later stage for a more established business. So it's two slightly different angles. And it's worth doing your research around all of these, and also talking to an accountant if you think you will be sitting in the kind of venture capital or private equity space, because that's quite high growth. I want to stop there just to double check the Q&A, because I think the chat's still not working. Let's make sure there's nothing that we need to address. Great. All right, thank you. Keep them coming in and we will make sure we pick up the right questions as we go through. Now, there is a caveat here to all the information I'm going to be providing you with, and that is this is aimed at providing ideas for small businesses and covers an overview of various types of funding. This is not financial advice. So if you do want to investigate any of these areas further, please do speak to an accountant as you go into the financial detail. You can also start to speak to small business and industry associations. Obviously, Small Business Britain is a great one, but there's lots of different, you'll have your own chambers of commerce, you'll have different small business or industry specific or sector specific associations you can speak to. They may have information about equity funding that their members have had success with. So it could be similar to what you have already or you're going through. So that's a good first port of call. Likewise, your accountant or bookkeeper, they may have had other clients who've been successful getting equity funding. They may also have clients who are looking to be investors. So that's quite a nice tie-up as well. Your bank, they can provide good advice too. And as I mentioned, business incubators and accelerators, likewise. Friends and family, that's another option. They may be more patient about getting a return on their investment, may not want to exit the businesses quickly, or they may know people who want to invest. But obviously, there is a caveat with that, which is if you get friends and family involved, you may or may not be comfortable mixing the sort of business and personal financial elements there. But broadly, there's 5 ways to get money into your business. So you could be looking at a loan, a bank loan, or a loan from family. External investment, grant funding, tendering for work, and then pure sales. So over the next few slides, we'll cover some of the pros and cons of each of those. So loans. Some of the pros here is that you retain control of your business. So it's a pure financial investment whilst you still run the business as you choose to. You may be able to apply before you've made enough profit to put back into your business. So it could be a startup loan for a very new business. You can get good interest rates and term length, and also a variety of loan types. So it could be startup funding, could be asset financing for new equipment or stock, invoice financing, and also working capital loans as well. That's where you start to go into the real financial detail and the cash flow of how your business works. You can also loan yourself, loan your business money from potentially your savings. So you may have taken redundancy or have longer term savings, which you can pull some money out of, invest it in the business. And when you start to make a profit, then you can take the loan back out again. Just want to pause for a moment there. Amber, there's lots of questions coming in and a few people putting their hands up. Is it possible to get the chat function working? So I'm just worried people have got hands up.
Yeah, for some reason it's not working. All the settings seem normal on Zoom, but we can just use the Q&A going forward because I think it's working the same.
Okay, that's absolutely fine. So we can do that. And throughout the session, I will try and address as many questions as I can, but I won't have time to do all of the little nuances. So if you've got any particular queries over certain terminology, then absolutely pop that into Google. Lots of research around every single point that will be raised in here. So do please go ahead and start rummaging around online for more information. Some of the cons we have here. So things like some of the bounce back loans that were around at the time, sort of a couple of years ago. Sometimes the challenge people have had is they've either not been affordable to repay, or they've spent the money and now they're realizing that it's now having a negative impact on the business because they didn't necessarily need to get the finance at the time. Some of the other cons, it's difficult for startups without trading history. For certain loans, you might find that you can get one, but your interest rate might be higher. Can be time consuming, and it may be a restricted loan. So it has to be attributed to assets, and it may not be suitable for overhead costs. So ultimately the loan might be against an asset that could then be called back by the bank if you fail to make payments, rather than just spending the finances on staff costs, rent, utilities, that sort of thing. Things like hire purchase or leasing equipment, that would obviously be attributed to a specific asset. So again, you can risk your assets if you secure the loan, if you have a personal guarantee, potentially if you're not a limited company. So it's just worth thinking about all of the pros and cons with every type of income that you might get, just so you're safe, that you know you're thinking about risk, that you're comfortable with what the options are and whether you can afford the repayments. Okay, external investment. So this is where we start to think about funders and investors. So some of the pros are around the ability to access a variety of investment options depending on where you are with your business. So it could be pre-revenue or business plan stage, or it could be a very long trading business where you're actually thinking about investing to grow to then exit the business in, say, 3 years. It often gives you fast expansion and high growth potential. So sudden injection of cash means that you can often do all the things that you wanted to do, but typically then you have to think about your staffing, your scalability, whether you actually have capacity to do it. You might find also with external investment, you have less restrictions on how you spend. So capital costs, i.e. stock, assets, physical items, or revenue, which would be your the overhead costs, your staffing, your rent, and so on. It's typically growth focused, so the payment or repayment could be based on the returns rather than a monthly loan payment. So that's also an option if you want to think about the future payback, rather than having to make a monthly loan payment regardless of how successful you are at the moment. You'll also find with external funders, depending on who they are, but they will typically have lots of experience and business advice they want to contribute, and they would also expect you to take on board. So with a loan, you would receive the money and the bank would let you do what you want to do with the business. Whereas with an investor, they could be an expert in the sector that you're working in. And so it's a really good mentoring type relationship for them to help you grow the business. So it's a bit more involvement. It's not just cash, it's actually having like a trusted advisor in your business. The alternative, some of the cons, think about external investment, is you may lose partial or full control of your business as you give up a stake commensurate to the level of investment. So you've all seen Dragon's Den, where there's a financial sum is mentioned and a percentage is traded. You need to work out how comfortable you are giving up 5%, 10%, 80% of your business. And ultimately, if the investors then choose when you exit to cash in their shares, you might have to cash in your own to be able to make those repayments. You might find there's quite high pressure around your business. So you will need to meet targets and deal with lots of different stakeholders when you have a variety of funders or investors. So be prepared that it's not just you producing the product that you've always done, but you might have to start reporting on a regular basis, looking at what the return on investment is, what the kind of key performance indicators are. And so you can then respond to the investors because they are literally invested in your business. So it's not just about you anymore. Make sure you are prepared for all of these, all of the meetings. So be prepared, tell your story, have your statistics, understand your financials, what the return on investment will be. If someone is going to invest £20,000 in your business, what are they going to get out in 3 years' time? And also be ready to pitch to a variety of different investors. You're not necessarily going to find the first one to be right for you. And it's also a two-way relationship. You have to be comfortable with them like they're going to be comfortable with you. So don't just jump at the first opportunity. And then family and friends may invest. But again, it's your choice as to whether you want to mix business and personal relationships. So that's something to consider, especially as people want to help out potentially quite early on. Well, what are the terms and conditions for that finance? You know, what's the expectation? So you need to know that you're comfortable professionally as well as personally, because you don't want any awkwardness if something doesn't quite work out. Grants. This is quite a broad area and lots of people want to access grants, but they are generally quite specific. So some of the benefits with grants is that you can get partial to full funding for specific projects, which you may not be able to afford otherwise. Some grants may offer 20%, 30%. Some of them might be 100%, but for a much lower value. So typically you'd have to be able to match fund the other percentage. So if it was a 50% grant, you would have to pay 100% for the asset up front, then you would claim back 50%. So you're still as invested as the funder is as well. You may be able to get full grant costs for equipment. These are great because you can then diversify into new areas which you may not be able to do otherwise. So sometimes around manufacturing, this can be quite good. And as long as the terms are met, you don't pay them back. So you can also have access to grants according to your sector, business size. Underrepresented businesses can also benefit hugely from grants because funding pots tend to be assigned to quite specific areas. So it could be geographically, or it could be demographic, it could be both. So keep an eye out locally with your view to what grants are available. There is no particular one-stop shop to find all the grants available without spending 4 figures on the database access. There are, however, should be through your libraries, access to different grant databases. And I know the business and intellectual property centres at some of the national larger libraries also have access there to Grant Finder, which is great. So you can literally go in, log in, look at all your terms, look and see what your search terms are. Maybe it's because you're a charity or a CIC or a small business, your location, what you're looking for, and even historic grants. So you can see what has been awarded. Some funds only come up periodically. They might open twice a year. So you need to know when the next one's coming around so you can then sign up. So it is worth seeing what grants are available. However, they can be time consuming to apply for. They can feel bureaucratic and overly specific. And typically they ask for a lot of information. So you need to have your financials in order. You need to know exactly what story you're telling about why you want the grant. So what are the benefits to your business? Does it help you grow? Is it a recovery grant? Is it for employability? So you need to really sell yourself succinctly to be able to stand a chance. It's often, when you get the money in, it's often, it carries strict terms. So it could be for capital assets, high growth projects, not for overhead costs, unless it's an unrestricted income-based grant, which is for core costs. Typically, these show up in the charity sector and for CICs more than private business. And then proof of defrayal is often needed. So you need to be able to show an audit trail of how you've spent the grant, the proof that you've got the item that you've said you're applying for, and making sure that the payment comes out of the right bank account and everything is absolutely watertight. And that's generally for audit purposes because it is public funding. So there's a lot of paperwork that goes with it, but equally it can be really beneficial. So it's something to definitely look into. Okay, let's check the questions. Okay. I'll come back to the grants a little bit later on that one specifically. So let's also look at tendering. I've spent many years working on tendering. So there are different ways of doing it. Some of the pros of tendering, which is also known as bidding, you may have to fill in an RFP, which is a request for proposal. You've got different terminology according to whether you're going private sector or public sector. Normally tendering is public sector or working in restricted industries, so industries that have more governance around them. See it a little bit like going out to get 3 quotes for a builder. You know, you want to know you've got a defined scope, and the pricing is absolutely tied down against each item, then you can compare and contrast equally. Otherwise, it's quite difficult to work out whether something should be £1,000 or £20,000. So on the flip side of that, as a business, if you're tendering, it can be great validation of your business expertise, because what it really means is that you have to stop and think about your business, answer the questions they're asking for, and really demonstrate your capability, your experience, your solution that you're putting forward. And it's quite a good way of almost taking stock and going to get those testimonials and case studies that you haven't had time to do, and really validate your business. It is time consuming. That's on the flip side. And when you're running a small business, you don't often have the spare time to be able to go and do something during the working day. So tenders are typically done slightly out of hours. Not ideal, but it's part of it. When you've done the first one though, the rest of them become easier. Some of the other benefits are it being around it's organic growth, and it's a funded opportunity. So you have a defined contract to work against. You may also be able to break into a new and larger client that you wouldn't normally be able to, because you have competed fairly, you've gone out to a public tender, and you've won the opportunity, either on your own or maybe in collaboration with others. You can get on a preferred supplier list or a framework, which means you should be able to get your services procured faster next time, because you've already done the sort of due diligence piece. And also it means you can analyze your business during the process and be really critical about what it is you offer, how you want to grow, and how this project is going to help. They are time consuming. You can't drive the need. It's not your timeline you're working towards. You have to wait for an opportunity. So if the local council is going to procure something, you have to wait until they're procuring it. If you're new in business as well, it can be quite hard to validate your experience and cash flow, because there are often standard limits on things like insurance levels or turnover. Doesn't mean you can't do it, but it does mean it can be quite challenging if you're looking at something that's much bigger too. They are potentially risky if you've overcommitted or if you've priced too low. So make sure you check the payment terms, that you're not trying to deliver, pay someone's wages and then not get paid for 60 days. Whether VAT is included or excluded, because that's a 20% hit on you if you didn't get that right. And also whether you have capacity to deliver before you get paid. So tendering is typically for slightly larger businesses, but it's still a good way of getting income into your business if you find something that works for you. They can be price sensitive as well. Right, so let's have a look. Sales. The pros. This almost sounds quite obvious, but typically we do look at how to get external funding into our businesses quite often. And in reality, if we look at how long it might take to wait for a tender, to apply for it, to deliver the work, would you be better off spending that time building a good network or looking at your marketing approach and selling, making more sales? So by doing this, you build a stable customer base. It's quite organic. It's fairly low risk. Basically, you're selling what you're good at, what you're known for. You can test the market, see what's working, adjust, and then keep selling. You might diversify slightly, you might not, and you shouldn't really be at risk of overcommitting unless you take a huge order and realize you can't fulfill it, but it should be much more manageable and organic. Some of the cons, though, are things like the speed of sales, so maybe building your pipeline, the speed of actually the transaction going through, and lack of high growth. Yes, it's organic, but if you want to see a real, sort of hockey curve shift in your business, then you might need to look at investment instead. You also may spend all your time selling and not delivering, or vice versa. So you have to know how to manage a pipeline in your business too. And are there any others? Are there any other cons to just selling? If you can think of any, add it into the questions. Okay. Right. Business planning. So with all of the previous thoughts in mind and all of the different ways of accessing funding for your business, you need to have a solid business plan regardless, whether you're going to go for a tender, a grant, a loan, investment, or you want to at least validate what you're doing so you can maybe get some personal investment in. Get your business plan together. Now, it doesn't have to be huge, but some of the things you should have in there is an overview of why your business exists. You know, what are your goals? What do you do? Who do you serve? Why do you do it? Have a marketing strategy in there too. A summary of your target market and audience, and a really clear view of your financials. So you could have your revenue, what your income streams are, but also what your spend is and profitability on certain items, and potentially some kind of cash flow forecasting. So if you're in production, you will know your time is money. So if you're making ceramics, you could only sell a certain amount because of the time it takes to make them, to fire them, to cool them down, glaze them, and so on. So it might take 4 days to turn around a batch. So you could recruit somebody to do double the amount, but obviously you're going to have to pay another salary. Alternatively, if you're buying in products, there comes a point where the scalability means you can actually buy in much cheaper per unit cost. So maybe it is better for you to buy in 1,000 items of packaging to send your products out in, because per unit cost, they're much cheaper than 100 units. So think about how your all of your financials come together, because if it took you just a little bit of investment to be able to secure that cheaper per unit cost, because you can now go out and buy 1,000, that could be worth doing if you know you've got the pipeline of people wanting to buy your products. You need to do a little bit of target market audience, market analysis summary. So who's going to buy what you do? What's the appetite? What are the demographics? And what operational support or structure, including management, is in your business? So what are the roles and responsibilities? Is it just you? And if it is just you, that's great. But what do you actually do in your business? Because you will be making the product that you sell or delivering your services. You also are your own head of marketing, your head of sales, your IT, your accounting, and your HR person. So can you just start to split out what the roles and responsibilities are clearly, so you can see how, if you grew your business, you could start to actually create a job for somebody. And then lastly, in your business plan, what's the overview of the services or products that you offer? So that has to be really clear, especially for any investor. You need to have a sound, solid business plan and good financial thinking, because if you are going to talk to investors or funders or go for a loan, they want to see that you are scalable, that you can grow fast, and that you can deliver good returns on investment and increase the value of the company, not just keep going at the same pace, regardless of the fact that they've invested. Some of the nice to haves if you want a larger business plan are all on the right. So information about your supply chain, your partners or collaborators, a much more detailed marketing plan and market analysis, funding or investment information, KPIs, which are your key performance indicators. So they're your targets that you might be setting and much more measurable. So you can see whether you're on track or not. Some of the financials, so forecasting, and the scenario modeling. So that's really around, if we kept making this one product and selling it, we think our income, our revenue would be, twice the amount it was last year. However, if we went into a different type of product, actually there's a gap in the market, therefore it could be 5 times the amount. So it's just looking at those different options. And then your products or services descriptions as before, but this is with the timeline. So this is going to start showing what your product development roadmap might look like. So that's, you can start to see what's going to happen over the next 1, 3, 5 years. Okay, I was going to a little bit more detail on some of these. And it's to have a look at your goal setting. So what do you want your business to look like in 3 to 1 year? If you're going for an investment, they will want to know what your growth plans are and equally what your exit strategy is. Are you going to be in the business for the next 10 years? Or is the idea to drive as much growth as possible and then you sell it in 3 years and then you will take a payout? Get clear on your why your business exists and your vision, your mission, your values. So what's the purpose? Why do you do what you do and what differentiates you? Audience personas. So who do you serve at the moment and who would you like to serve? Because perhaps you're looking at getting investment because you want to now serve a wider audience. And so the particular funding is around that one sort of bit of diversification or market penetration. Make sure you understand how your customers or consumers purchase, what drives their decision making, and what do they like? So what's the demographic, age, location, lifestyle, that sort of thing, so you can really understand who you're targeting. And then marketing, what are your key marketing messages? Make sure those are obvious. That you're clear on your mission, vision, and values, because you need to communicate that throughout your marketing. And what's your strategy? How do you engage with people? Quite often hear that people want investment in a business, and you start to dig a little bit and say, well, that's obviously great, but who do you serve and what's your following? How do you engage, and what's your kind of your database of potential customers? And then actually find they haven't really got much on social media. It's not consistent. There's no real brand story. And so you need to get lots of this in order before you even start to go for any funding. Especially with crowdfunding, you need to have really good, strong following. And typically you need about 50% of the funds already raised before you go to crowdfunding, because it's proven proven that it'll be more successful if you already have 50%, because people then jump on it very quickly. If you're trying to raise £15,000 and you start with £800 already, it's really, really slow. So you kind of want that pace to get crowdfunding working well. And then lastly, on marketing, make sure you know what your channels are, how you use them, and where your customers engage with you best. Revenue streams. So how do people spend with you? So is it online? Is it per product? Is it per service? Is it recurring revenue? List out what your services, products, and income streams are. So you might have a particular downloadable ebook. You also might run online workshops, but with that, you've also got video recordings. So there's like 3 different things around your time that you basically spend once. So how do you get that income? If you break that down, you can see clearly which are the most profitable areas and which ones need to be either bolstered or maybe you drop them, and making sure your time that you spend is as profitable as it can be. Your fixed and variable costs need to be outlined, and I'll show you that on the next slide. And then get clear on your profitability for each of those. If you don't understand the profitability and your costs and your potential income, you need to spend time working on the financials before you can start to get investment. On Dragon's Den, you've seen people come unstuck when they haven't got the answers very clearly, because investors are absolutely focused on the numbers, and they will look at the detail. In your business plan, spend a bit of time doing a SWOT analysis. So look at your strengths, weaknesses, opportunities, and threats. So you know exactly where you sit in the market and what opportunities you might take, but equally internally what strengths and weaknesses you might have. Could be around capacity or staffing, for instance. And lastly, what's your value proposition? So what do people know you for? Why do they come to you especially? What sets you apart? What's your unique selling point? Why would they buy a product from you over somebody else? And do you have proof? Case studies, testimonials, references, quotes. collect these as often as you can, because then when you want to use them in a tender or your marketing materials, you've got them to hand, and it really helps validate that somebody else made the decision to purchase from you before, therefore you must be credible. And also learn to tell your story. So what is your business story? What do you do? And how do you demonstrate all of this to your customers? And then lastly, let's have a look. So I'm just checking the Q&A. Work on the commercials. So this is about funding, but it's about you being absolutely clear on what you understand about your business. So you could make a table like this and literally run a spreadsheet with what your products and services are. So what do people currently buy from you? What are you known for? So it could be in a shop, you're going to have obviously a lot of stock and inventory. So you might need to batch this up, or you might just make 3 types of ceramics. And so you know exactly what you have. Innovation. So what's the viability of new products or services, if that's what you want to develop? And what does your market research say? Are you creating something because the market demands it? Or are you doing it speculatively, hoping that you think they might want to buy something from you? So just be really critical about that. Investment. So what are your investment options for growth? Could be, the reason to have this as a table is to put the investment, if you're looking for that particular funding, against each product or service. So if you want to streamline some of your manufacturing to be able to make things faster, sell them cheaper, it's fine, then you might be able to get grant funding for machinery. So that's very different to investing in stock, because a grant is less likely to invest in stock, but more in a capital asset. And then list out your fixed and variable costs. So per item, you will have fixed overheads and you'll also have variable. So your fixed overheads will could be your, let's just take the ceramics business, for instance. So the cost of materials, your rent, your bills, they should be fixed. At the moment, though, I think we know they're all slightly variable and only going up, but make sure you know what those fixed items are. So per set of plates or mugs, you know you've got a unit cost of X amount of clay, glaze, power, and sort of split out your rent. So you know you've got like a bundled cost. Your variable costs could be you delivering it and not allowing for the fact that you actually have to drive there, or you've been caught out on the postage costs. And so if you say free postage and packaging, then you're the one that has to swallow the postage cost, whether it's £4.50 or £45. So that's something to just consider. And profitability, what's your profitability per product or service once you take out all of your costs? And then what's the return on investment on new innovation? Ultimately, is it worth it? If you invest in something new, will you actually make a decent return, or is it just going to be business as usual, but with higher running costs? Lots to consider. Always work on the commercials. That would be my first piece of advice for sure. And then just looking at all of the Q&A, it's quite a lot. So Amber, you're going to have to help me with that. And let's move on to questions.
Emma, thank you so much. That was so informative and so much information there. We've got so many questions in the Q&A, so I have been collecting them as we go in, and I've got them in a list for you. Just the number one question we keep getting asked is if you'll receive slides and a recording. We'll be able to share the slides with you and a recording afterwards as well, so don't worry too much. You can catch up on this webinar today. So I'm going to dive straight in. I know we've got about 14 minutes left of the session. So if that's okay with you, Emma, I've got a few general ones to kick off with, and some specific ones on grants and investing as we go. So first one is from Emma, who says, I have an online shop using Shopify. I have been approached by a couple of companies who loan money and get payback via percentage of revenue. At the moment, I'm not large enough. They require 100,000 revenue. Two questions. Have you heard of this model and what do you think? Do you know of anyone who do this at a lower revenue? It's quite a specific one.
It is quite specific. I haven't, but I would consider looking into their background. It sounds like they're very broad. So it could be that they literally say, right, 100,000, proof of concept, it works. We'll invest and there'll be a certain percentage back. If they're coming to you, I would think the percentage payback's probably quite high, because it's a bit like, those credit card, spurious credit card applications you get sent in the post and you've been pre-approved at 278% or something. I always take these things with a pinch of salt. So I don't know of people who do that for lower turnover businesses, but I would certainly do a bit of research and do your own due diligence into the business model to make sure you're not going to be, a bit done over by them.
Okay, cool, great, thank you.
They might be brilliant. I don't know them, but it's just,
yeah. Bit more of a broader one for you. Have you got any advice on sponsorships?
Sponsorships. So is that going to be per product, I wonder, or generally as a business?
The question's from Eleanor. So if you want to put that into the Q&A, let us know and we can come back to that.
That would be good. Sometimes, so sponsorships, I think typically will work on a lot of as like an ambassador as well, isn't it? On the reputation of the other person. And if they've got 3 million followers online, then they're obviously going to have a little bit more credibility than someone who has 20,000. So if you want to be involved with them, you could increase revenue with that kind of reputation and relationship, but I don't know how much it actually translates into full funds. But do add something into the question if you want to, in case I've missed the mark on that one.
Okay, great, thank you. So I've got a few questions on grants now. So number one is it worth paying a registration fee to join a grant access database?
So yes, I might have mentioned, it's a really difficult one because the actual database fees are huge. So what you'll probably find is you've got access to paying a lower fee to a company that has the main account. So you can start to get for, £100 a year or £100 a month or whatever, access to tenders or grant information. It's not that it's worth it or it's not worth it. It's a really hard one to answer, but I would ask the companies that you're thinking of looking at what their success rates are and also what their terms and conditions are. So maybe you can pay for 2 months and just see how it goes. Without any penalty, rather than saying, handing over £1,000 for a year and then not having anything. So I know they can be quite expensive, but equally, if it's the only way of you accessing it without spending hours trawling the internet, then it could be worthwhile.
Okay, great, thank you. So Joanne has asked about funding needed for equipment and new product production. Do you know of any grants or funding that's available for that?
Not specifically, because it's likely to be location based, business sector based. You can be a sole trader and still eligible to get a grant, as long as you can prove that your business and personal finances are separate and you're obviously accounting properly. That's absolutely fine. It's not dependent on size of business. But some grant funds will have really specific boundaries to them. So some of them only focus on innovation that supports sustainability. So if you're looking at changing all of your light bulbs in a warehouse to LED, you can probably go for a grant. That's not a problem. Whereas others, you can't do that at all. It has to be based on capital assets or growth or creating new jobs. So there's nothing specific on that one, I'm afraid, because it will be down to your location. If you look at your the local enterprise partnership, look at your regional development sort of group, you'll find that they will push you out to certain areas. So do look at your LEP, as they're known as, LEP, because they will tell you what's available in your region. And you may find as a female owned business, you're entitled to certain funding because it's an underrepresented group, or it could be minority owned businesses, could just be pure geographic location. So it really depends.
Okay, yeah, that's great advice, looking at your specific region and seeing what's available to you. Okay, so Eleanor actually has just followed up on the sponsorship question. She said, sponsorship for a particular product. I'm looking for a business to support a social impact project. I'm a sole trader, so funding is very tricky.
Yeah, okay, so social impact project. If your offer is really clear and the benefit that they get out of it, so for them it'll be more around their sort of corporate social responsibility perhaps, then if you have a really clear deck, you know, a couple of pages even of a nicely put together PDF of what it is they get, the benefit to them and their business, then it should be okay to look at getting sponsorship. But you have to have a really compelling story. You need to be able to say, this is why we do what we do, because it helps a certain demographic in the community, potentially, and that's why it's great to get involved. And also target your sponsors quite neatly. Make sure you're not just kind of, you could go broad brush, but actually if you target somebody that you know their business has a real interest in arts in the community, you're more likely to get support from them than you are someone else who's a little bit less invested. Okay,
great, thank you. So my next question for you is from Kim. So she's a company based in Berkshire. She's successfully grown throughout COVID and lockdown, but wants to raise capital to invest in more events. What is crowdfunding?
So crowdfunding is where you go out to the general public for any sum of money, but typically lots of donors, a much lower sum of money. Better for consumer products or services than B2B. If you wanted to put on an event, so you wanted to put on a play, put on a show, you could crowdfund to get that done by selling, when it's done, you've got 2 tickets, you've got a signed poster, you get a DVD, whatever. Make a package and sell it for quite a large sum of money. And then you could just say, well, actually, the other alternative is 1 ticket, you know, 1 poster, a smaller sum, or you want to invest and get 10 tickets, that's great. That's going to cost you, you know, £250 to invest in. But with crowdfunding, you do need to have a good following already. I think Crowdcube is one of the crowdfunding platforms. So have a look at some of the terms on there and what they recommend. But you kind of can't start from scratch. They're not as popular. If you start from scratch, you need to have enough money behind you already to get going.
Okay, great, thank you. Okay, so next one is a bit broader again. What funding is available at good and reasonable interest rates?
That's about as long as a piece of string, I'm afraid. And I would be going to your bank on that one, and just as a starting point, because you obviously understand how they work already, so you kind of got a benchmark. It's like saying how much is insurance. Unfortunately, it's really difficult to quantify what the best interest rates would be. But again, look online for some of the small business support sites and just see what options there are, recommendations.
There is a lot out there. It's just, I think, knowing where to look. So maybe do you have any websites that off the top of your head, or places people can look to see some of these funding and grant options available to small businesses?
I did have a couple of links, but because I'm sharing my screen, I can't access them. But I mean, a really straightforward Google search of UK bank loans for small businesses, see what comes up, and funding, and then finding grants. Grant Finder is the website that has, it's a huge database. But then obviously accessing it means you'll need to go somewhere that has access to it, because otherwise you'll pay thousands for a subscription.
Okay, amazing. And we can include those links in the follow-up email with the recording. So don't worry, guys, you will get those. So I've got a few questions. I've got one question actually, sorry, on tenders. Do you have any examples of tenders that you could share? I'm a product-based business based in Devon.
No, unfortunately, again, it's very, very broad. The tender will be issued by the company that wants to engage your services. They will ask the sorts of questions that they feel are relevant to their business. You might go through loads of procurement type questions, which are around business size, financials, health and safety, all of those policy type questions, then come to your solution and your pricing and your team and that sort of thing. So sorry, I know it doesn't sound very helpful, but again, it's a very, very broad industry, so it's quite hard to.
No, you're totally helpful, so informative. So don't worry about that. So sorry, I just lost my questions. I've got just for the last 2 minutes, I've got a couple of questions on investment. So number one, what are the best KPIs to give to investors?
So if you look at, again, sorry, there was another link about one of the funding platforms that will show what's relevant for a sort of a small business. But you'll want to be showing what the return on investment is and what are your sales targets and what's your kind of market penetration. So if you say you're going to grow by 50%, where is it, how, and why? And so they can look at it clearly and say, okay, so if they're going to grow by 50%, if you haven't, why not? What's the problem been? So again, it'll be specific to your business, your industry, and also the type of investment you're going to go for too.
Okay, great. And my next question for you is, how long-term is an external investment relationship? Is it usual for an investor to exit within 3 years, or is it longer? What happens if you fail to meet targets, I think they meant.
So it could be 3 years. Much less than that might be, I'd say, a little bit uncommon, but 3 years would be a reasonable length of time if it's high growth and you choose to sell. If not, you would be potentially having a longer relationship. That means you might be over 5 or 10 years, and you either start to pay them back, or you the returns may be a bit lower, but it's a longer term relationship. And if you fail to meet the targets, that's something you'll have to discuss with the investors and the terms that they put onto the investment themselves.
Okay, amazing. We have just reached 12 o'clock, so I think we're going to wrap up today and stop picking your brains, Emma. Thank you so much for sharing all the information. And as I said, we will be sharing the recording and slides with you, so you can catch up on this fantastic webinar today. Finally, just a massive thank you for you all joining us today, and another big thank you to Lloyds for partnering with us on this webinar. We'll see you all very soon, and it's goodbye for now.
Thanks.